Welcome back to Trader Sage. We're going to review price action on the ES price chart utilizing ICT concepts. These are weekly levels. This is also a weekly bearish fair value gap. And let's just go back to weekly. So we had this volume imbalance. Last week, price traded into it. And if you think internal range liquidity, and we want to target external range liquidity, that's what we just reached on the Asia session just now. And this weekly bearish fair value gap is what I have highlighted here. So you'll see what price does from here. On the last video, we discussed Purge and Revert. We were on a 15-minute chart. We kind of went to the 1 hour, I believe, and kind of touched on the Purge and Revert model. And we can just review that now. Well, at some point. Well, so this was the weekly draw on liquidity last week. And again, so that's internal range, and then external range liquidity would be here. External range would be the previous week's high in this case. And we just took that out not too long ago. All right, so we have price stabbing into here, holding above consequent encroachment of this bullish fair value gap. Why is this fair value gap significant? It's because price traded down into it and took off. So that's a true support and resistance level. And of course, you divide fair value gaps into quarters, and the consequent encroachment of the midpoint is a crucial part of that equation. So we have price running higher. You have a break in market structure, a market structure shift, retrace into this imbalance. You have another market structure shift, taking out these relative equal highs. We have a bearish fair value gap here. If we wanted to draw that out, we could. And then you kind of see that price respected that, traded back down, right? Boom, boom, break. Traded into this bearish fair value gap, retraced into this bullish fair value gap. And then traded here, pull back again, rebalance in this price range. You can see price stayed above the midpoint of this down close candle. Right? See that here? Like the bodies tell the story, the wicks do the damage. So we have another market structure shift here. Retracement. So this would be your order block. This would be your propulsion block. Right? Like if that's an order block that kind of stabs into or trades back into an order block, a propulsion block here. And you can see price stayed above the consequent encroachment of this 4-hour fair value gap. And again, the bodies tell the story and the wicks do the damage. And you can see price holding above this 4-hour fair value gap, consequent encroachment level. Then targeting that external range liquidity. And that's the 4-hour chart. That's a tradable. That was definitely tradable utilizing weekly levels. So this is 4-hour levels, and we can step down right now. All right. So I think the other day we were talking about Purge and Revert, but we want a 15-minute chart. We kind of jumped out, went back to the 1-hour chart because that's the ideal, right? So the day of the purge is here. That's Friday. Purge the previous day's low, significant key level. Ran the previous day's low and then retraced, right? Purged down and then started to revert. So we have a break in market structure here, another break here, and traded into that, pull back into here. So this is the entry model. This is the entry model. Targeting what? So the day of the purge, you count back, including the day of the purge, you count back 1, 2, 3 days. So 3 days. So you can count forward 1, 2, 3 days. So price fell short here. Fell short here until today. So the Purge and Revert model, I would say, was completed here, and then other factors, other concepts carried it to the end, right? So, so this right here is a balanced price range. Just kind of drew that out. This you can. All right, so that's a balanced price range on the 15-minute chart. So 4 hour, 1 hour, 15-minute, 4 hour, as ITT says, 4 hour, treat the 4 hour or the 60-minute as you would treat your daily chart, and you utilize the 5-minute chart for market structure, and a whole new world will open up to you. Honestly, the 4 hour is like it's triple screen ideal. 4 hour is for short-term trading. 4 hour, 1 hour, 15-minute, those three kind of go together. And you see potential market maker buy and sell models on the 15-minute chart in comparison to the 4 hour. Of course you can. And you see it better or have a better risk to reward potentially on the 5-minute. Of course you can, right? But again, for me, it's more like if that time frame I'm going on is dropping to, it's clear there's really no need for me to go lower than that. So we have the purge here, we have the trade into this 4 hour fair value gap, and we have the pullback. The pullback here, and we have a willingness to trade higher, and so we have a run on stops here. We have a market structure shift here, taking out these relative equal highs, and we have a pullback. So that's tradable. This is chop accumulation, manipulation here, distribution, low risk buy, and you have a similar situation, consolidation again, manipulation, 2 legs down, retracement into this balanced price range, and then take off. And that's just talking off the 15-minute chart. Sure is doable, right? So that would be like an optimal trade entry here to here, and this pullback here below 50%. Here's the run above here. Here's another optimal trade entry long here. Break. Another one here for today. Sound like I'm selling snake oil, right? Like there's one here, there's one here, there's one here, and one here, right? Like Provet, right? There's this entry, this low, this high, retracement here, and then 11:45 on Monday, run higher. You got another pullback here. You can utilize this swing low to this swing high. Here's your entry. Bodies tell the story. It's the 15 minutes. All right, bodies tell the story, the wicks do the damage, right? I'm eyeballing this, so I may be off by a couple of ticks or so, but so we have price trading into this 4 hour fair value gap as a, and treat that as a high time frame draw on liquidity. So when you're thinking about narrative, right? Thinking about trading, think about narrative, right? Where is price coming from? where is it going and how would it get there? We already established the weekly draw for last week was the volume imbalance. That was internal range. Potentially the next draw on liquidity is the external range liquidity on the weekly chart, which is the previous week's high. That's where we believe price may be wanting to go, right? So on this time frame, or the 4-hour time frame, because that was a weekly levels, weekly bias. Go to the 4-hour and lower, and it's it's more like, oh, how would it get to that level? So any type of pullbacks, any type of in this case, any type of anything that goes against our bias, you really have to reevaluate it or kind of consider that to be like part of the program to get us to higher prices, right? So that's why these 4-hour fair value gaps, and especially what we discussed on the 4-hour chart, it was like, oh, it did that, then it did this, then it did this, because the draw is up here this week, this previous week's high. It's no need for it to like go all the way back here if the next draw is here, right? So even though you had this pullback, it still was in the previous day's range, and we didn't go all the way back, but we went here. So that's one trade entry here, and here's another one for today. And you can play around with these wicks. If you don't like these long wicks, you can play around with a model where you don't have to use it. And I think I discussed when I have these long wicks, I just use the body. And this short wick, to me, it doesn't matter. So we have that balanced price range, this SIBI and this BISI in the same area overlapping. You can call that an inverted fair value gap if you like. And that would be your entry long. So you have this 4-hour level, you have this 15-minute balanced price range, you have the optimal trade entry long, and that's at 415. 415 and holding it until now. Like, so potentially people who aren't in the market right now would have missed this setup. But it's there, right? Prior to market, right? Still the optimal trade entry. And again, one point about optimal trade entries is that you don't necessarily need to know about any of the PD arrays, right? You don't need to know about fair value gaps and breakers and order blocks and propulsion blocks, mitigation blocks, etc. All that stuff is very helpful, of course, if you actually do know and understand that. But OTE setups does not require any of that. So this is where we are. We just reached target 2, which is kind of like aligns with the previous week's high. Previous week's high, aka external range liquidity. And if price continues to push higher, we want to see if it's going to hold below this weekly bearish fair value gap. All right. Or is it going to rebalance this price range here if it drops? All right. All right. So that's today. This is yesterday. We kind of touched on all of that. So technically the weekly draw on liquidity is done. You can call it a night. Potentially tomorrow's Thursday. It's potentially a reversal Thursday. There's a probability that price will do some type of go in a direction opposite than the direction it's been going on all week. Oof, type of stuttering going on there. Anyway, I don't like this gray here. I think I always play around with this color of the midnight open. And let's leave it at 2 or something. All right. What else is there? I think that's pretty straightforward. Thanks for so we covered Purge and Revert. We covered market maker buy and sell models. This is definitely a sell side of the curve. Here's the buy side. This is nice, right? Right, let's see what it looked like on a 5-minute chart. Nothing really different, right? Gonna expand this. So yeah, this is potentially, we need to break in structure. We need some displacement, break in structure, and the retracement into a fair value gap if it does form, in order for us to consider going short. That 15-minute chart goes with the 5 and the 1 minute. So you really want to see if its low is broken. And we have it's kind of like a balanced price range, but you have these wicks balance this. You have this bearish fair value gap that's been violated. You really want to see if price is going to hold. This is a 1 minute chart too. So that kind of shifts the perspective on what are we looking for, right? So we have this. We want to see if price is going to hold below that. And ideally break this, then probably do a retracement, but we'll see. We'll see. This is the 4-hour level, and we want to see if price is going to hold. If it does go down there. So yeah, that's all I have. Thanks for watching. Please like, comment, subscribe, and I'll see you another time. Lock in.